Hi there, welcome to Grain TV. I'm Kevin McNew. It's Monday, November 21st, an up day in the markets. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, corn gaining 4.25 cents, closing just a tick below 350. Beans was the real crusher to the upside, gaining 27, getting up to 10.21 on January. And wheat in Chicago, anemic with only a 2-cent advance, gaining up to 4.10. News today started out positive in the overnight as Asian markets were higher in soy meal and palm oil was higher as well. That got the soybean market starting Sunday on a positive footing. And then as we got into the day session, we got some strong export news, and we also had crude oil trading sharply higher, up $2 a barrel at one point. News in crude oil was focused on meetings between Iran and some of the OPEC oil ministers. This is ahead of the November 30th official meeting of OPEC, where they're planning on a crude oil production cut. So the news out of the weekend was that that meeting was favorable, and that Iran thinks that we're going to see anywhere from $55 to $60 oil after this supply cut is announced. So that got the crude oil market shooting higher. That helped beans along for the ride as well. But some of the news that was out today, we take a look at export inspections, Monday's weekly export inspections from USDA. These numbers were off the charts again for beans, coming in at 2.6 million metric tons, well above expectations ranging from 1.7 to 2. Traders have been looking for a start to the slowdown in soybean exports, and today we did not see that in any sort of meaningful fashion. So that really helped fuel the rally that got started overnight as we got into the early morning session. Other export numbers were not quite as impressive, although within analyst expectations. 876 for corn versus 800 to 1 million metric tons, and in wheat coming in at a respectable 430 versus 300 to 500 expected. If we look at the numbers year to date on export inspections, we see corn and soybeans really doing substantially better than last year. If we look at corn in particular, up 83% over this time last year. Beans up 20%. Both of those numbers, those percentage gains, are above USDA's numbers. But in the case of corn, we'll probably see those numbers start to come down percentage-wise, because we had such a dismal first half of the 2015-16 marketing year. Wheat, on the other hand, very much in line with USDA expectations in terms of exports. Let's take a look at the daily chart on soybeans. Because of the big gain we had here, we're pushing up into the upper channel of where we've traded over the last 4 or 5 months. In fact, closing today around 10.21, that gets us within striking distance of the recent high, 10.30 on the overhead here. So look for 10.30 as the next proving ground to see if we can keep this rally afloat. Certainly, there wasn't much news to hang our hats on. There was no export announcements from USDA this morning, no rumors of export deals in soybeans. Really, it was just sort of Asian markets moving higher and strong export inspections, but we need to see new business to keep this market moving higher. Speaking of technical indicators, at Grain Hedge we have our technical alerts platform that you can log into. If you're interested in doing this, by all means visit us online at grainhedge.com. Last week we were showing soybeans had the potential to move from a breakout of 992 up to that 1012 range, and we did in fact get that confirmed today, clearing the 1012 and getting up into 1020. So technical alerts is a really valuable tool, updated in real time. Give our trading clients the edge they need to look for price momentum and see where the market may be heading. That's all we've got for today. Join us tomorrow on Grain TV, and we'll be looking at the latest crop progress report on wheat.